Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks. Early this morning when we were making new highs, I sent this chart out of all the indices because they were making big ABCDs, and all with the exception of the NASDAQ. It had been the weaker. It hadn't even made the 618. It's when the opening came that it had the big explosion. But that was the Russell. You can see the ABCD. We had a 3-8 move down. First 382 right here, second 382 right here. It's, still on down on the day. We had the same thing going on in the Dow Jones Industrial Average that we were watching at the same time. And I think I already pointed that. The other one, I'm going to get this up here. We had a beautiful 61% retracement here at 34.66. The market broke $15. And then it's gone up to 34.74. So you would have, at the worst, you would have made a little bit of money. At the worst, break even, because once it goes back above that after making $15, you're only risking $8. And you made 15, you ought to try to protect some of it if you can. Now we're going to look at the S&P here because it's been up this area here for quite a while. This is where we have been over the past few days. I posted this last night. I had this pattern right there that I was looking at, okay? Market came all the way back, dropped about 40 handles. Now it's back up again and made another new high. We're still up in the same area that we were before. Nothing big on the breakout. These are not breakout things that I can see. Now here is the Dow Jones. I wanted to bring it to your attention too because as we were watching this last night, I said, well, looks like because this was an hourly chart and we had several nice patterns in here, I drew them in and I said there should be some movement around these spots right here. So if you put that in right there, there it came in right there, almost exactly at the high. From there, it dropped 300 Dow points. Now it's rallied back all the way back. Looks like we're sitting right at the 61% retracement again. And, well, right at the 50%, not quite at the 61. So it's not wildly bullish, but it sure as heck ain't bearish. That's all I can tell you. And what's interesting, though, is I do not have any cycle things that are here. Usually on a day like today, there will be a bunch of stuff, but don't see anything at all. That thing that I looked at called, what was it, doggone thing? Planetary, something planetary combinations or whatever it was. That's still valid because it's never taken the high out of the Dow Jones, of the S&P or the NASDAQ. The S&P did take it out. Yep. Only one that hasn't taken out is the NASDAQ. The Russell's taken it out, and so all of them had. So I don't have many cycle stuff. That's why I go back to what I came to the ball game with, folks, and that's ABCD. It doesn't work all the time, but let me tell you, it's not a bad idea. Okay, now let's take a look at another one that we've been watching for quite a while, and that is the El Catel. And I said yesterday, we should have waited, but there we got our 382 today, right up here at 40. We're now almost 2 cents into the good, right? Got to update this. Hold on 1 second here, refresh today. Just get this in here. Yeah, so we sold it. You should have been selling it right there. There was your A, B, C, D pattern right here. There's where it is right now. This was one of the largest volume day. Well, it was the largest volume day ever in cattle with that big move that we had. We went from 237 to 242, 5 points up. Now we've given almost all of it back. And it appears that maybe this was a minor top. And let's use the word minor because who knows, this thing has been going up for so long. But the fact that it's just done this is the fact that we did have a 382 retracement is one of the things we look for. We'll draw that in. And I focused on this in the video that I sent out this morning. And boy, I tell you, it's not been easy with Google. They do not like me, and I don't know why. I'm such a nice person. Let's take a look here. This is the crude oil, folks. And we are looking for a bottom coming in here in crude oil pretty post-haste. So here's where we are in crude oil. We were looking for it to come down to right here. Let's try to show you what that is. There's your ABCD. The problem was, let's move it over a little bit because there's a bigger picture right here that we have to watch. See, there was the low right back here. So what we're going to do now is I'm going to show you the difference between that ABCD and the Fibonacci numbers. So there's our low. You can see the ABCD pattern right there. So now what we're going to do is we're going to hopefully, if I can get this thing to work, and that will be a magician's task, but there's the ABCD, and there it is right there, folks, and we miss it by just a heartbeat. Okay, now we didn't get it bought. Then we went up to here. Now we're just chopping around. We've just made a small ABCD pattern right now. Let's just blow this up right here because this is to me this is a valid trade. You've got this bottom in right here, okay? And if you look at this, I hope the data's right because some of these prices that I'm seeing here, yeah, so you came down right here. So this should hold right here. Had a little bit of a rally, hasn't done very much, but it should hold that level right there, 63.37. That's within 20 pips of where we are right now. Okay, so that's what I'm watching here. I think it's got a chance, to do this. Now, tomorrow's show, we're going to have Mike Moore of More Analytics will be our guest. But today, we've got Stan, the man who's looking in the sky, taking good care of us because he's bullish and he's right. And I was looking for a top, and hey, we didn't lose much, folks. I mean, come on, we've done pretty good on some of these other things, and especially like Treasury bonds. I mean, even Treasury bonds has had a nice heck of a rally. We pointed this out yesterday when we came down to that bottom. We made that double bottom right here. Okay, and then we had a rally today. Today's pullback right here, probably exactly 382. Let's just double check. There's where we're going right now. And, I think with the Federal Reserve coming in here, they're probably going to pull a rabbit out of the hat of some kind, if there is one, and who knows? We'll find out. Anyway, that's what we're looking at. Now, let's move around. I want to cover a couple things here before we get Stan up here. Let's see, I've covered everything of all these indices that I want to cover that I think is important. The gold. I just wanted to show you this. I traded gold 3 times today, folks. Such beautiful patterns. Look at this. I mean, this is just really amazing. First of all, there was right there was your 61% retracement on the daily. I'm going to just get that up here, put that 4-hour up. I think that's where it is. You'll see there it was right there. Okay. Now I'll get back to where we were looking at it on a smaller time scale. There's where we were. Market backed all the way off to here. And let's just see if that was a 382 off of something right back here. Well, I don't think it is because you've got that one. Nope, that's more like 50%. We'll see. Double. Nah, shucks. Just a second. We're going to take a break. Stay with us. I'm going to do some charting. Pay attention. Maybe if you want or not. Whatever. Oh, right at the 618.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is the Treasury bond market on an hourly chart over the past week. If you'll notice here, I cloned this in the video last night to show you the last time we had a move like that. We're doing the same thing right now. We're almost there. You can see within a pip or two that we've taken out this high. Okay, now you had the ABCD to the downside. You had another ABCD to the downside right here. So you're coming into some pretty strong resistance. Now remember, what's his name, Powell or Trump? I don't know which one I was going to be talking today or tomorrow. I think they have their final meeting on Friday, and who knows what's going on there. But use stops when you're trading, folks. As you can see what happened in the NASDAQ and some of these other markets, they don't have some realism involved in it. So you've got to be really careful. But that's what we're watching here in this. If we look at the daily chart on this, we're also coming up against some really strong resistance up here. At the 78% level. I'll draw that in so you'll be able to see it. We're at 618 right now, but there's strong resistance here at 12, okay? 115.12. That's where that larger hourly chart gets you up to that level right here, which is right up there at 12. So that's where I'd be watching it right here. You can see the 1.618 is at 12. So that's the number you want to be focused on. We're only 4 pips away from that, folks. So watch that one real closely, okay? Now, let's move on here and cover. Someone asked me a question here just a second ago. Skype me, Teams me. Let's get this out of the way for a second. And they asked me to take a look at that cattle again. So if you'll give me a second, I'll get it right here. Here's where we are. Okay, hold on. Shut the front door and raise the red. Shucks. Shut the front door. Hold on just a minute. There's the cattle today. All right. Oh my goodness, we just broke down here just a minute ago, folks. That's good. We like to see. There you go. Now we sold it. They sold it right there, and that's a pretty nice move. So let's see what happens. This might be the high in the cattle, folks. I'm not saying it is, but now we got a 3-cent profit in it. So, for heaven's sakes, don't let it go to a loss. I'd move it up here to $29.10 to lock in at least, $400. That's what I would do. But it's starting to move to the downside for the first time in a long time. This is only the first down day, folks. Yesterday, with even that big swing, it was not a down day. What we've done now is we've taken out the high the previous day back there on Tuesday. Okay, so That's all that's doing, maybe just looking for stops. But the fact that it's hitting that 382 again, that's what we like to see. So we'll move this one out of the way. That's why the person wanted to see that with the cattle. All right. And then we'll move over here. We've already covered the Treasury bonds. Okay, someone's asked another question here during the break and asked to look at the AI with the Treasury bonds today. And I'm going to do that. I haven't looked at it. I haven't looked at any AIs for the last 3 days. And the reason is I'm focusing on the pattern itself. I don't want to get off the beaten path. But after what they've done in the NASDAQ and some of these others, this doggone machine. There we go. Well, this is where we were. Let me try to refresh this today and see if we can get anything up and running. Yeah, this is what it's supposed to be doing, is going down. We'll just look at it from the very beginning. But the most important thing is the pattern itself, and it really wasn't working very well, in my opinion. Well, there was a low, no high here. There was a little high here, but now I wouldn't trust it. I trust the numbers, folks. I trust 115.12. That I trust, because I know what that number is, and I'm not going to be fooled by anything else. Okay, let's move over, and I wanted to talk just a tiny bit about the euro, because we're starting to see some really good action in all these, as always, and that means that it's going to be exciting, whatever the Fed decides to do. Okay, get the hourly up on this. We should have a pretty good rally going. There's where we are. Okay, let me get this up here. All righty, I'm going to try to refresh this, folks. Give me a second here. See if I can get it to refresh. It's going to forget that. Okay, here's where we were today, folks. Right there. There was the pullback right here. I'm missing data. Why, I don't know, but I believe this is the right high and right low. I'm going to try to refresh it again. And the reason why I'm having trouble with the problem, folks. I'm in California on the beach here, and I'm in my good buddy's beach house. And the problem is I'm on a hot spot, and my hot spot ain't too hot. So anyway, here's where we are. As you can see here, you go from this low to this high. You came right almost exactamundo to the old 382. We miss it by 5 pips, and then we have the nice rally up. We have another one right there. See that secondary one right there? This is telling us we want to be going higher. Now, this is going higher. We know what's going lower, right? And that's the dollar index. The next thing we want to do is to look at the dollar index and see where the next support would possibly be. So we'll pull the dollar index up, and you can see we had the ABCD. Hold on one second, get this up here right now. And there's where we go. Okay, we missed the ABCD on this. Okay, we didn't do much of an ABCD here, and now you see we're breaking down. This tells us we're going to take out this low right here. This is an important low. Remember, that's at 67.40, because if we just look at this is probably why the gold is so strong too, with the dollar weakening. Now you have another ABCD to the downside right about up in here. So it's coming, we're going to go after those stops right in here. So that'll be interesting, because you're going to have an ABCD going after these stops over the last 2 weeks. I wouldn't be selling that one. I'd be looking to be a buyer there at 97.5, which would be equivalent to that euro, selling it up here at 107.40, because that's another ABCD pattern right here. A, B, CD, and the good old, hold on, let's try to refresh this. I know they're not going to give it to me, but that's neither here nor there. We have 1 minute till paradise comes, folks, and then we're going to have Mr. Stan Harley in the house, and he'll be telling us what he's looking at. Let me get this up here, window tile vertical, and see what's going on. At least the patterns that we're looking at are starting to, they work all the time. The trouble is they don't work every time. That's the problem. And this one, this one's a little difficult, but hey, listen, boys and girls, I will tell you this. I might take a few losses along the way, but when the bell rings and they're heading down in those directions, we're going to be there. I can promise you that. That much I can promise you. Maybe not in my lifetime, but that's what I'm going to be trying to promise you. I try to do one other one here, and I can't find where it is. Shut the front door. Oh, that's Apple. 1 second. Someone's asked me about that again, and I was going to bring the chart up on it, and we'll have Stan on here in just a bit. There's Apple, and I think, see if it's about 230. Oh, it did. It cleared 230. That's what it had to do, and looking pretty good right now. Yeah, it looks pretty good. Let's get this, blow this up a little bit here. Wow, this data is just absolutely... No, it's not. It doesn't even bother to. It won't even get the data. But yes, we did clear this. This is the pullback yesterday, and no wonder. Wow, why isn't the Dow up more? For God's sake, that's a big move. Boy, there must be some Dow stocks that are getting hammered. All right, let's take a break. 877-927-6648. Stay tuned for Stan the Man Harley.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, one of the reasons why I happen to be in California by the ocean here is we're having a memorial for Jim Twentyman. Hold on, I think we got our man, Mr. Stan Harley. Buy a meal, folks, $2.87, risk $3. I think Stan might be in the house. Let's double check. Hey, Mr. Harley's in the house. How are you doing, partner?
Just doing awesome, Larry. Just doing awesome.
Well, I'm up here in Avila Beach. We're having a memorial for Jim Twentyman. His family and everybody's here. They had me to come over to see how things are going along. And boy, is it tough. Man, I miss that guy. I worked with him for 50 years, Stan, almost every day. That's hard to get over. Anyway, tell us what you're looking at, Mr. Bullish. Harley himself. Everybody here is saluting you. They're throwing fresh fruit, wine, caviar. Keep up the good work. What are you looking at now?
Well, I don't know how to respond to that.
Me either. Go ahead, Stan.
Gosh, I wish I had your good looks. Oh my gosh.
No, you're never in that
picture
lucky.
on the screen. I mean, you are one handsome dude. I'm telling you.
Yeah,
and it's got your
Cruise.
picture up and my name. I mean, I couldn't ask for any better than that.
This would be good.
I'm still bullish, Larry. Let's look at the stock market, big picture here. This is a chart I've shown in the past, but for the newer folks, I thought it might be very informative nonetheless. This is a chart of the S&P 500 going back to the mid-90s. And what I've noted here with purple vertical lines are the dominant lows in the stock market. I call them the primary monthly cycle lows. And they tend to occur somewhere between 30 months to about 80 months, with the most frequent recurring pattern of right at 49 months, 49.2 months. Very close to 4 years. In the past years, folks have referred to this as the so-called 4-year cycle. It's actually 1 month longer than 4 years, but I don't think they notice that. Sometimes it contracts by a factor of 0.618 to 30 months, and sometimes it expands by 1.618 Fibonacci to about 80 months. And as you can see, those 3 cycles that I just described, you can see every single primary bottom in the stock market can be defined by those 3 cycles. And this goes back decades, centuries, millennia. The other thing to take in this most recent, the low in this pattern occurred on April the 7th of this year. We've rocketed higher here, and we are at new all-time highs, as you know. The other very interesting technical observation, by my eye, is the recurrence of right translation on the way up. Right translation means the crest or the high point in price occurs to the right of the midpoint of the cycle. So if you take a look at this 30-month cycle right here, where I'm showing my mouse cursor, the midpoint would be about right here. And notice where the high point or the crest occurred, to the right of that midpoint, and that's known as right translation. And that has occurred all the way up. And right translation is characteristic of bull market structure. And notice all the way up, and even into the most recent recurrence. We saw a peak there on February the 19th of this year, a low on April the 7th, right translation. So until we see left translation, which we have not yet seen, we are still in a bull market. Now, having said that, point number 1, I'm expecting the next low in this primary monthly cycle to occur around 49 months from April the 7th, 2025. So that's 4 years and 1 month. So that says approximately May of 2029. I'm also theorizing that we're going to see not right translation, but I'm theorizing we're going to see left translation in this current cycle, which means the high point would occur in about the first 1/4 of that cycle. So in approximately, we should see a high within 1 year from April the 7th, 2025. That means at the latest, April the 7th, 2026. I think we get it in the first quarter of next year. That's what I think. We'll talk about that more later. But I've got a lot of work that points to the first quarter next year that could coincide with what could be a high that could be a very important high. But we're not there yet. In the shorter term here, we have had a pattern that I've discussed with you on the air a lot about, and that is this rule of four, which Mr. W.D. Gann actually noticed about 100 years ago. Simply said, he noted that a stock or an index like the Dow Industrials in a market advance would initially incur resistance 3 times before it broke through. And a lot of people would say, oh my gosh, 3rd time it didn't punch through, triple top, this thing is done, it's toast, we're heading south. And as you can see, at Dow 45,000, we made 3 attempts to punch above 45,000. We did it in December of last year. We did it in late January of this year. And then again a few months ago. And then we pulled back. We made a really quick but sharp low on August the 1st. And then we began the 4th push against Dow 45,000, and we just broke through it. Punched through it, very sharp rally, up almost 1,000 points a few days ago. We've backed off to kind of retest that pattern breakout, and we're inching higher once again. And I think we're going to steadily grind higher here. I think you're going to see Dow 50,000 in a blink of an eye. When we ultimately top out, I think we're going to be just slightly north of Dow 50,000 first quarter next year. It's kind of what I'm thinking.
Gann rule of door and raise the rent.
Once again, proved its mettle.
Well, you've certainly been right, my friend. Everybody applauds what you've done because you were one of the first that said we are going up, and boy, you have been right. Well, thank you. Thank you. It's a lot of it's a labor of love. It's a lot of grunt work. Well, you do great work, and that's why you have such great followers and stuff, Stan. We appreciate you just being with us here, to be alert. I was bearish up until today, and I've given that up. So, well, with the exception of 1 or 2 little things. Anyway, Stan, let me ask you a question. Sure. Is there anything that could happen? Well, you don't know what the Fed's going to do or anything like that, but is there any type of a chart pattern where not a crash type scenario, but where something reverses and takes all those numbers out right away? Would that change your mind?
Why don't we pick it up on the other side of the room, Larry?
Okay. Sorry, we got a break. Pay a few bills. We'll be right back with Stan Harley, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, speaking with Stan Harley, the Harley Stock Market Letter. Please continue, Stan.
Larry, you just before the break, we were discussing what would change my views about the market heading higher. I'd have to see the market turn down, and prices rolling over would pull my indicators that track price velocity and price range down. That, of course, has not yet happened.
Yes.
But I don't have the Fibonacci-Lucas relationships in place that would suggest a major top now. So it would come as a total surprise if this thing suddenly turned on a dime and headed south today or tomorrow. I just don't see the numbers that would support that.
You'd be looking at a couple days anyway, wouldn't you, Stan? Take a couple days for that to happen?
I don't see it now. Let me back up just a moment here. There are times that I don't see it until after the fact. That does happen. Or I see past data new light, or new light new data comes to light that changes my views, and those things can happen. But right now, I don't see the technical underpinnings for a major top here. Not today, not this week, not this month. I don't see it. First quarter of next year, that's different story.
That's the answer to the question the gentleman asked, so thank you.
Got a couple of charts on Bitcoin and home prices I thought we would review. This is a topic that's near and dear to many of the viewers. This is a chart of Bitcoin going back to the very first day of trading in July of 2010. This is a log chart, not an arithmetic, but a log chart, which adds much better perspective to price. And as you can see, we've gone steadily higher, and we're just north of 100,000. We're in the 100,000 area right now as we speak. Two things that this chart tells us. Number one, the highs are separated by the Lucas number series, 29, 47 so far. And the first two pair of highs were separated by exactly 29 months. 29 is a Lucas number. The next succession of highs were separated by 49 months, which is 2 months above Lucas 47. The next pair of highs were separated by exactly 47 months. And I've been theorizing the next high would occur in the vicinity of 47 months, a Lucas number. Now, over here, this cycle expanded by 2 months. I would expect at some point a subsequent cycle would contract by 2 months. So you get this very pristine Lucas count. If we went exactly 47 months from the November 2021 high, that would put us into October. If you subtract 2 months from that, you get August of 2025, which is where we are right now. Let's look at the daily chart. Darn, so far, looks like we may have peaked out in August of 2025. Yet to be proven, of course, but very tentatively, it looks like we might have a high in place in Bitcoin. Now let's go back to the prior chart again. Notice each time we've made these primary monthly highs, every single time we have pushed just beyond the base 10 count and pulled back below it. Every time. So here we rallied to 1, pulled back below. Here we rallied to just above 10, pulled back below it. Here we rallied to just above 100, pulled back below it. Here we rallied to 1,000, back below. 10,000, back below. You get the picture. Okay, in the present environment, we rallied just above 100,000. We got up to about 125,000, which is 1/8 of a million. 1/8, 1/4, 1/2. Those show up time and time again in markets as technical resistance and support levels. And now it appears to be we're backing off. Yet to be proven. Could we go back up here and make a slightly higher high in the next month or two? Sure. But my indicators on the daily chart are starting to roll over here. So I am theorizing that we might have that 47-month cycle high in the rearview mirror.
Wow.
And then the last market I thought we'd take a look at would be home prices. This is a chart of the National Case-Shiller Index. I pulled this data off the FRED website, maintained by the U.S. Government Bureau of Labor Statistics, the BLS. And what I've done here is these are monthly price bars. It gets updated every month with a 2-month lag. So the latest data is through July 29th. And, we may have gotten some new data this week, which I haven't pulled off. This is a couple of weeks old. Anyway, the point being here, the monthly line represents each of the monthly price bars, and then the red is an 18-month moving average of those monthly price bars. And as you can see, we're making all-time highs. We haven't turned down yet. But take note of this 18-month moving average. I put on here a buy-sell signal every time is rendered when the monthly price bars break either from above or below that 18-month moving average. So, for example, here, the monthly price bars broke below. We had a sell signal. Here they broke above. That was a buy signal. Back here in the summer of 2006, price broke below the 18-month moving average, stayed below it all the way down. So if you bought, you were premature. And it wasn't until first quarter of 2012 that the monthly price bars broke above that 18-month moving average, and they stayed above it all the way through the present. They pulled back and kissed it right here a couple of years ago, but did not break below it. Still have not yet broken below it, so we are still on a buy signal in real estate. But having said that, I'm not sure I'd be a major buyer at this point because I think we're getting a little toppy here, and we're due for a pullback. But that's the picture as I see it for the present.
Well, that's awfully good, Stan. I want to thank you for being our guest today. We'll have you on again soon, and the quality of your work speaks for itself. But thank you for being a regular on our show here because we really like to hear what you have to say. Well, thank you, Larry. I'm pleased to be your guest.
Okay, that's good. We'll have you on again soon. Out there in California.
Okay. Stan Harley, folks, Harley Stock Market Letter. Okay, we've got a little break coming up here, I think, for a second or two. I don't know how much time we got left. 33 seconds. That's a lifetime. No, we don't either. We'll be right back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're looking at the chart of December soybean meal. Okay, now I want you to see this. This is a what we call a Twentyman line. Jim Twentyman developed this many years ago. It acts like a fulcrum. In other words, you've got 1, 2, 3 spots right here, and this is where it should move higher from that spot right here. Now you notice we were a buyer at 288, so we're at $100 in this. All I'm going to do now is I'm going to change the ratio on this because it's gone a tad lower, and I just want to see if it measures to 1.618 off of that last move down. And there it is right there. There's your 1.618 sitting right there at that number right here. You only have to risk $2 on this, folks. $200, and if it's right, you're going to make a lot of money. And this is a Twentyman line. Basically what it means is act like a fulcrum. In other words, this end goes down and that end goes up. But Jimmy worked on those for a long time, and they have a high degree of accuracy. But like we say, they're not always are going to work. But watch that one very, very closely. Also, earlier in this morning, we were talking about this ABCD pattern here in the NASDAQ. This one that's over right here, I'll blow it up. You can see we're there right now. It's trading at that number right now, 23773. Right at that number. And if that's any good, And it's a squirrely one, see, because, you had this big move here. You could easily make a case for 1.27 on this, would take this all the way up a lot higher. But there's the number right there, 233.73. That's been the high. So whether that's anything or not, don't know. But you know what, folks? It's a calculated guess, and that's what we try to do. It's not how much money you make, it's how much money you don't lose. The one thing I'd like for you to do is join me tomorrow. We're going to have Mike Moore of More Analytics on the phone, and he's always got some great stuff about crude oil. So live every day in an attitude of gratitude, and may God bless.
Steve Rhodes